Hello everyone and welcome back to another episode on investing, which is brought to you by Moods Investment Research in Ontario, Canada. My name is Mehmood Bakhsh and today I'm going to be talking about Bitcoin, blockchain technology and gold. Now Bitcoin obviously being a virtual currency, as we know, which is being equated to real currency and also compared to gold. So it's gained a lot of traction over the last 2 to 3 years and has become very popular among new investors. In fact, Gen Z in particular holding almost half of all the Bitcoins in the world. Now, I'll be making an argument whether Bitcoin should be considered as an investment or as an asset class, and whether it should be included in a portfolio if you're considering to invest in Bitcoin. But before I do that, I think it's extremely important to know the difference between Bitcoin and all the other asset classes and understand the genesis of Bitcoin, what it is and how it's produced. Now, Bitcoin, obviously, because of its size, has become a big threat to most governments, especially in the US and central banks, and also some of the largest banks in the world. Now, Bitcoin, although was created in 2009, right after the biggest financial crisis of 2008, as an alternative to the currency and the banking payment system, but it has gained a lot of traction and has grown exponentially over the last 3 to 4 years. Its price had actually peaked well over $60,000 per Bitcoin over the last couple of years. But right after that peak, its price actually dropped by more than 70% at about $16,000. And it has recovered by more than 100% after dropping down to that bottom tick of some 16,000. It's trading at about $34,000 to $35,000 per Bitcoin today. And it has a market value of well over $1.5 trillion today as we speak. Now, it's extremely important to understand that the creator of Bitcoin remains unknown. It was created under mysterious circumstances. The creator, the father of Bitcoin, is known by his pseudonym, which is Satoshi Nakamoto. We don't even know whether he's alive or dead, but he circulated a white paper which had the algorithm or the formula for Bitcoin on the internet in 2009. Now, Bitcoin is created through a very complex process, deploying very high-speed computers or the CPUs using very expensive chips. Now, these computers actually solve a problem. So let's try and understand and dive into it. Now, a lot of people argue that Satoshi Nakamoto might be a Japanese because that's what the name suggests, but I don't quite agree to that. Now, whoever he or she is, I strongly believe that he must be an American. And there's a reason why I say that. We know for a fact that the US is far ahead when it comes to technology. So the Industrial Revolution was led by Britain in the 19th and 20th century, and the technological revolution is being led by the US in 21st century. Therefore, I strongly believe that it's actually the US which is quite capable of creating something so innovative. Now, Bitcoin is a decentralized digital asset which operates on a peer-to-peer network. This is the main difference between the banks and Bitcoin, because Bitcoin can be sent and received as a payment without the need for an intermediary. Now, this is done through the blockchain technology. So the blockchain is nothing but the block of all the transactions. So the block is basically a ledger that actually records all the transactions. So it does not just keeps a record of all those transactions, it also verifies all the transactions on the network. Now, it's all done in a cryptic manner, which is what it does. It cryptographically signs and adds all these transactions to the block, which is why it's considered to be secure, because nobody can delete or alter these transactions in the block. So basically, this blockchain technology is all about verifying and validating transactions by the computer. Now, since this is done in silos in decentralized locations and there's no one to control it, there's no central authority, which is what actually threatens most governments and central banks who actually control the currency. Now, obviously, there are a lot of other cryptocurrencies which are created through the same process, but for the sake of this video and for ease of understanding, we're just going to stick to Bitcoin being one of the largest cryptocurrencies in this space. Having worked for a bank for more than 20 years, I know for a fact that this technology is good because it does away with all the red tape, but the question is whether it's not vulnerable to fraud. I think it makes it riskier when you have these exchange companies holding these digital currencies and their keys. I'll tell you where the problem is. So therefore, according to me, there are two biggest risks. and threats to Bitcoin. So first, the biggest risk is we don't even know who the creator of Bitcoin is, who actually controls Bitcoin to this day. So every time a Bitcoin is created in the system, a small portion of that actually goes to the creator of Bitcoin, which is Satoshi Nakamoto. So we cannot deny that he is the ultimate beneficiary who actually controls the whole system. Second biggest risk is actually these exchange companies who actually hold these digital wallets or the digital assets or digital currencies on behalf of the currency holders. Although most of these exchange companies actually argue that it's the safest and secure way of holding these digital assets because they provide a key which is considered to be the safest, but I don't quite agree to that argument. That is because the number of frauds that we have seen in this space since its inception. There were a lot of Bitcoins which were stolen, which disappeared overnight through these exchange companies. We know the famous fraud of Mt. Gox and very recently with FTX with billions of dollars being stolen. Therefore, in my opinion, I don't think it's safe in investing in Bitcoin yet. Now, obviously, having said that, that doesn't mean you should not invest in blockchain technology. As I said, from the look of it, it seems to be a very safe, secure, and decentralized. And it's done away with a lot of red tape, which is why a lot of banks are actually investing in blockchain technology. Here are the reasons that actually support my argument, which is the reason why you should not consider investing in Bitcoin. First off, we don't even know who created Bitcoin and who's controlling it. Secondly, when billions of dollars were lost or stolen rather through these exchange companies, the consumers didn't even know where to go and claim those billions. Now, there's a saying that the road to hell is paved with good intentions. Now, obviously, whoever created Bitcoin would have had good intentions. That is because when it was created in 2008, 2009, the world was in a mess going through that financial crisis. But the technology has been compromised to quite an extent today, and there are a lot of others who are actually controlling it. Now, why do I say that? That is because there's a halving process that actually takes place every 4 years. This is where the algorithm has been compromised, has been altered. Now, the price for Bitcoin actually fluctuates. That is because it's considered to be scarce. Bitcoin is very volatile. That is because there's a limit on the number of Bitcoins which could be created through this system. Now, this was the limit which was set by its creator. That limit is 21 million, which means there can't be more than 21 million Bitcoins in circulation. Now, I think more than 19 million Bitcoins have been created already. Therefore, the initial cap of 21 million, which was set by the creator for this particular algorithm, it has been compromised. That is because every 4 years, the price of Bitcoin is actually cut to half. The original algorithm used to reward 50 Bitcoins to miners, whoever solved the problem, which has been cut to half now. Now, those who control this algorithm now, which has obviously been compromised, claim that this is to control the supply of Bitcoins and also inflation because of its price movements. Now, this is what makes it more difficult and more complex for those who are in Bitcoin mining business because it's become less profitable. Now, this has obviously increased competition, the energy cost, and obviously the hash rate, which is nothing but the computing power which is needed to support the blockchain. This goes to show that the algorithm has obviously been compromised. And there are very few players who are actually controlling the whole system. There are a lot of malicious actors who actually try and control and manipulate the whole processing power and the blockchain system. Now, there's another aspect that we should also be considered, that transacting in Bitcoin is no more free. So every transaction, every payment in Bitcoin actually incurs a cost, which I think is around $20. Now, the whole idea since inception for Bitcoin was to actually eliminate this charge, which is usually charged by the banks. Now, obviously, there is no recourse if your Bitcoins are stolen, which are usually kept in a digital wallet maintained with your exchange company. Now, once they are stolen, they are irretrievable, which is why the risk is high. Now, you can't insure your Bitcoins. That is because there are no insurance coverage providers. Now, on the contrary, if you have physical good or physical currency kept in a safety box or in a bank, you obviously get insurance for that. Now, obviously, because Bitcoin is not controlled by any government or a central bank, because Bitcoin transactions are done in a blockchain, it is not taxed like a normal currency, which is what makes it riskier. This is why it will not gain acceptance anytime soon. Therefore, the lack of regulatory oversight makes it even more riskier. Now, those who claim that Bitcoin is a currency, so why do you need a Bitcoin to buy another currency? Now, here's the biggest question. Those who equate Bitcoin with money or currency, who actually understand politics, they know that countries have actually gone to war to keep their currency. But we know in international politics, countries also get into currency wars, what we are seeing today. When you have one country using expansionary monetary policies, countries printing more and more money to make it cheaper to import goods and services and devaluing their currencies in relation to other currencies. Now, you obviously can't do that when it comes to Bitcoin. That is because you don't know who's controlling it, and there are too many people controlling it right now. And for a physical currency, it's the state that actually owns it and used as an instrument of exchange for goods and services. So the currency basically represents the state because the state is the issuer of the currency. For example, in the US, the dollar is a legal tender and could be honored as and when presented in exchange for goods and services. Whereas that is not the case with Bitcoin, because you don't even know where to go, because it does not even exist physically. It can't be touched because it's intangible and it's sitting somewhere in the system that you can't control, which is why when it's stolen, it's gone. And even if you have it and you own it, you don't even know whether it's going to be honored at some point in future. Because Bitcoin is created in a very mysterious way and there's no one to take responsibility. It's decentralized and it's created in some production facility, which is why it attracts a lot of criminals who do not pay any taxes and in most cases involved in illegitimate activities. Having said that, it doesn't mean that Bitcoin can never gain acceptability. Now, because of this technological evolution, I'm a firm believer that in this whole metaverse ecosystem, there might be a place for Bitcoin. Now, we know for a fact that most of these currencies, before they are issued, they are backed by some assets, primarily physical gold, which is why most of the countries, even to this day, keep their reserves either in a strong currency like US dollar or in gold. For example, when we look at US, although they abandoned gold in the 1970s, but they still keep a lot of gold as their reserves. It has more than 8,000 metric tons of gold, which is worth close to $500 billion. Similarly, after the US is actually Germany, which has more than 3,000 metric tons of gold, which has a value close to $200 billion. When we look at other stronger countries like Russia and China, they also have more than 2,000 metric tons, which has a value which is in excess of $100 billion. And they are followed by other strong economies like Switzerland, Japan, and India, which have around 1,000 metric tons with a value in excess of $50 to $60 billion. And this is one of the reasons why I say that Bitcoin cannot be equated to a currency or gold. Now, for those who categorize Bitcoin as an investment or consider it as an asset class for their portfolio, let's look at the definition of investment. Now, obviously, when you invest in an asset class, be it real assets such as property or equities or bonds, you obviously invest for future returns. In other words, you invest your capital or money to get more money in future. Now, the returns could come either through capital appreciation or they could come through rental returns, dividends, or coupons. Now, none of this could be associated with a Bitcoin. That is because Bitcoin does not pay any rental income, a dividend, or a coupon. The only thing that we see for a Bitcoin is a ticker, which is the price appreciation or depreciation, which is either the price moving up or down. Therefore, in my opinion, it fits into the category of speculation. So if you're a day trader or a gambler, it definitely fits your criteria, but obviously not if you're an investor. But that is not to say that you can't make money in speculative activities. Even gamblers make a lot of money going to casinos. And those who trade also make money, but to a lesser extent compared to those who actually invest long term. One of the biggest problems for Bitcoin is that its risk cannot be assessed reliably. That is because for any other asset class, be it a business, an equity, or a bond, you take their cash flows because they generate a lot of cash and then you discount them back to know their intrinsic value. Whereas in case of Bitcoin, you can never know its fair value. That is because it does not produce any cash flows. Now, obviously, because Bitcoin is so volatile, it does produce some returns because of its price movement. But there are a lot of factors and there's a lot of illegal activity that's actually driving that price, which is what makes it riskier. Now, for how long does that illegal activity last is the biggest question. And no one knows for sure if it's going to go on forever. It's like any other illegal activity or a crime that doesn't last forever. So therefore, it is going to come to an ending. And definitely that's going to be a bad ending for a lot of people. Now, make no mistake, you know for a fact that a lot of countries have actually gone to a war. So every war has been an economic war, be it World War I or World War II. That is because during these wars, the inflation was so high, the currencies for certain countries actually lost so much of value. All these wars were caused by a currency war. In fact, the currency wars led to these economic wars, which is when the countries printed too much of money, devalued their currency, which created so much of inflation, which caused a devaluation of one currency against the other, which is why the countries went to a war. Therefore, a Bitcoin or the digital space has actually not gained that popularity or acceptance. Bitcoin or the digital economy have not actually fought that war or won that war yet. However, I just want to make my position very clear to let you know where I stand on this. This in no way to be construed, or I'm in no way trying to say that there is no digital economy or it has no potential. But what I'm trying to say that it's going through a lot of scrutiny. That is because it's not regulated. It has not gained its status yet. Since Bitcoin has no basis and it's not backed by any assets such as gold or anything else, which is why it has no value in my opinion. And its price of $34,000 to $35,000 is not justified at all. Whereas for the currencies, they also have a value which is in comparison to other currencies, which is basically backed by assets, which is the businesses that are there in that particular country. For example, in the US dollar, which is backed by assets, which are businesses, basically like Tesla, Apple, these are all trillion-dollar companies. Therefore, the value of dollar as compared to other currency is much higher because it's backed by these assets. For a currency to become a universal currency, because that's what they are predicting for Bitcoin, to become a universal digital currency, it has to be backed by some business or an asset, because a business is an asset, or it should be backed by gold. Now, that does not mean that Bitcoin can never become a universal currency. Obviously, within the digital space and the digital economy, there is a possibility that is, if all the countries come together for Bitcoin to be accepted and become a universal currency similar to US dollar, be accepted by all the countries, there's only one possibility that I see. That is, all the countries coming together, the world becomes a unified place with all the countries as one, putting all their gold, the gold of the entire world together, and then backing it up. That's just one possibility, but I don't see that happening anytime soon with the given circumstances, where there's so much of conflict among the countries which is on the rise. Therefore, I don't see any future for Bitcoin in the near future. But who knows, once the digital economy evolves and it develops and it's more regulated, there's definitely a possibility. Bitcoin obviously cannot be equated to gold because it has no utility. So let's say if you buy gold and if the price does not appreciate, you can always use it. So it has utility. But you can't do the same with Bitcoin. You don't even know if it's going to be accepted at some point in future. That is because there are very few, very shady vendors who actually accept Bitcoin. It's going to be very hard for a regulated business to actually accept Bitcoin. First, it's because of the price movement. It's so volatile. No business would ever take the risk of actually accepting Bitcoin. I know for a fact there were a lot of businesses who actually accepted it initially, thinking that the price will keep going up, but then they stopped. I don't think there's going to be any vendor or a business who would ever take the risk of accepting Bitcoin. That is because initially when some of the businesses, whether Tesla or any other business that actually started accepting Bitcoin, thinking that the price will keep going up and there's going to be more value in future, but then when it crashed, that is when most of these vendors and businesses actually stopped accepting Bitcoin. That is because no vendor or business wants to be in a loss. So the risk is high, obviously, but in case of gold, if you ever buy gold and even if the price does not appreciate, you can always use it yourself, or you may gift it. We know for a fact that India is one of the largest producers and consumers of gold. It could be used as an ornament. It is used as jewelry, so it could be used especially by women. If you buy gold and if the price does not go up, there's no problem. That is because you can always gift it to your wife, to your girlfriend, to your mother or your sister. So there's no question that it has utility, which has a value. The same goes with currency because it's accepted, especially if it's a strong currency like the US dollar or the euro, because it's backed by stronger governments. This is what makes the US dollar as a universal currency. It makes the US dollar as a reserve currency which has a store value. Now, for investors who are considering to invest in Bitcoin and make it part of their portfolio, they obviously have to know the risk. Now, there's one strategy that they could use, which is invest in these mining companies which produce Bitcoins, which obviously is going to be like a venture capital investment. That is, if you really wanted to have an exposure. Because as I said, the technology is good. It's strong, it's safe, provided it's not manipulated. And there are a lot of banks who are actually investing in this technology to develop it. So there's going to be a lot of fintech companies which are producing Bitcoins today, but they might turn out to be more valuable tomorrow. Therefore, some of the blockchain technology companies do not just produce Bitcoins, they also produce hardware and software which actually help in producing Bitcoin. They produce very expensive chips, which actually goes in the system, which is basically the hardware, which is a CPU. They produce the hardware such as CPU, which is then used by most of these miners. Therefore, they are creating value, which is why you could be successful investing in these companies. And some of these fintech companies, which might be in debt today, that is because it is a new phenomenon. That is because they are creating something which is new. But once it gains acceptability, once the market industry is normalized, there's no denial that they're creating value, which is when these companies would start producing profits. So some of them might be in losses today. That is because of high debt. I can name some of the companies like Riot, there is Marathon, there is Hut 8 Mining, there's Bitfarms. There's Hive Blockchain. Some of these companies are in the US, some in Canada. There is Canaan, which is in China, which produces hardware. So you can invest in these companies and you could do well over a long period of time. Their stock prices might be volatile. That is because their prime product is Bitcoin, and because their profitability is highly dependent on the price movement of Bitcoin. But definitely the technology that they are creating will have more value in future. So basically that technology will start producing more profits and it's going to be used by banks. So they might be taken over by banks or other companies, which is what will help them produce more revenue, which is where you're going to be making your money. This is how you will do well with your investment in these companies. A word of caution though, make sure when you invest in these companies, you do your own due diligence and carry out your own analysis to make sure that you know the risk. Some of these companies that I named might be in profits. Maybe what you could do is create a small portfolio, invest in 5 best blockchain companies as a group, which is then you are mitigating your risk. This is obviously after a thorough analysis. Some of them might be making profit, some of them might be at break-even point, and the others might be in losses. But when you invest in a group of companies, there's a likelihood that you might do well over a period of time. Because definitely there's going to be some losses. That is because some of these companies might go bankrupt or go bust. But when you invest in a group like a venture capital investment, you will do well. So that's it from me for today. I hope you enjoyed listening to me and gained some valuable insights. And hopefully I'll see you in the next video with a different topic. But until then, be safe and take care of your investments. So bye for now.